Hello, YouTubers, friends, compatriots, bootlickers, shills, doubts, they service, peasants, vassals. I'm a useful idiot, San. Welcome. And today I want to talk about Japan. And holy shit, they are on QE to infinity and beyond. It's really quite staggering. This announcement that they're going to double and triple the Q&E that Japan has been doing for quite some time. In fact, they're the Mac Daddy of Q&E, having started Q&E essentially in 2001, and have been doing it more or less ever since. And this is a country, Japan, has government debt that's 250% of GDP and a total debt to GDP ratio of 600%. And so Bank of Japan has announced that they're going to triple their annual purchases of electronically traded funds, stocks, and property investment trusts. And the Japanese government bond ceiling has been raised from 267 billion to 713 billion dollars. Staggering, staggering figures. And then, if that wasn't enough, we have Japan's public pension fund, which handles 1.2 trillion dollars, is also going to move out of Japanese bonds and move into purchases of global stocks and electronically traded funds. So first of all, once again, we have Japan's public pension fund banking on stock markets continuing to climb, and it certainly seems that way in the short run for now. But for them to invest heavily in stocks and move out of bonds, but no, I can't necessarily say that Japanese bonds are a good place for them to be. So we see the Japanese stock market skyrocketing and the yen plunging. And there's been a background too of this, how this has affected their economy, and but I'll get to that in a minute. First of all, let's talk about some of the other facts that we have here. So we have nearly 30 years of government stimulus going on here. Right now, this, as I pointed out, this move has generated a front-running frenzy, a huge front-running frenzy. But what I find most interesting about this, of course, is that here we have Japan announcing this right as the Federal Reserve of the United States announces that tapering will end. And not and to add to the strange coincidence is the fact that the Federal Reserve is tapering off this program of theirs, while Japan substantially increases theirs. So very, very conveniently sort of picking up some of the slack that the Federal Reserve has created now. So seemingly more than a coincidence, but this is proof of a massive global bubble. Japan now has a massive bond bubble. I've read some articles where they're suggesting that the Bank of Japan is buying over 100% of government bonds now. I'm not sure exactly how over 100% works, but if anybody knows, please add in the comments below. And so the whole idea has been to create this target inflation rate of 2% to basically dig themselves out of this debt hole and keep assets running high there. But the problem is that the deflation that they're trying to fight is not the problem. It's merely a symptom of other problems in the Japanese economy. And certainly one of the things we have going on in the Japanese economy is this expectation of continued growth when they have a very aging population, and the debt-to-tax ratio is widening considerably. And so that's going to be a problem too. There's going to be less people paying taxes, and their tax revenues are going to drop right when they need it. And certainly the economy is not going to sustain quite the same way with this aging population that's not being replaced, I might add. And so we have this April sales tax increase, which has taken a huge chunk out of the Japanese economy for now, and I think in the long run it will continue to do the same. So let's go through some other gruesome figures. Of course, Japan is, since the 1989 financial bubble burst, they've had QE in 2001, they've had QE in 2010, they've had QE in 2013, and now they have QE 2014, massive monetizing debt on a huge scale, and of course, all the while saying they're not monetizing debt, which is what they're doing. And unfortunately, this for Japan, and this could possibly be where other countries end up heading to, including the Eurozone. You end up creating this endless demand for constant infusions, and that's where Japan is finding themselves. And this current round is only going to create more demand for more rounds of these infusions. Of course, I'm no expert, so who's to say? Maybe Kuroda is going to save the day. So anyway, and then some other interesting gruesome figures, like I was saying, is that 46% of the government's budget is borrowed money. So that even makes American government look frugal by comparison. A 2 to 3% rise in the interest rate would completely absorb 100% of Japan's tax revenue. That's how in debt Japan is. 51% of tax revenue now goes to service the debt. So 51% of all tax revenue in Japan goes to service the debt. And even this dependence on some of these new taxes, like this national consumption tax from 5% to 8%, is in the long term going to have more and more diminished returns once again, because we have an aging population. And I have a friend in Japan. Hey, friend in Japan, you feel free to chime in below, correcting all my gross miscalculations and speculations, and where I might be right or wrong. So anyway, so tax revenues are in decline, and then on top of that, we have Japan in the midst of what essentially is a slowing economy around the globe, including some of their trading partners. So anyway, that's where we are now, and incredibly, Japan has had a lost decade, and then another lost decade, and they're going to work on yet another lost decade, and this is all despite zero interest rates, essentially, and in QE and reinflation efforts that keep failing. So let's everybody around the globe take a look at what's going on in Japan, at least try and learn some lessons here. And Japan has slowly raised interest rates, but it still hasn't changed the fact that the Japanese stock market dropped about 50% between 2007 and 2008, and has barely returned, although certainly got a sugar rush in the last few days from this new move by the Bank of Japan. And we will have to keep our eyes open for other repercussions, including currency wars, unleashing more currency wars. We've seen this move before on other central bank announcements around the globe. And we could see the same thing in this case, unleashing more action by other central banks. Certainly, we're expecting big things from the European Central Bank soon, and after the midterm elections in the first of the year, many pundits are speculating that we're going to see a new round of QE in the United States, which is certainly quite possible, because stock market is going through the roof, but the rest of the rest of the economy is bogged down in this fake recovery. And I want to finish with a quote from Kuroda, the governor of the Central Bank of Japan, and this astonishing statement that's just icing on the cake for this new round of an incredible increase in Japan's quantitative easing. And he said that, quote, "The central bank won't hesitate to act again if needed," pointing out that there's still room for additional measures, unquote. Well, you heard it here. So there we have it. The Bank of Japan declares Bondszai. I'm a useful idiot. Don't you be one too.